Okay, so what kind of situation do we currently have in the gold market? As you know, gold has just reached all-time highs, breaking above the high that the market had created in 2011. And now that the market has created this huge impulse to the upside, what do you expect? You expect some profit taking on this huge move to the upside, specifically for which reason? Because the reason for which the market in the first place actually created this move to the upside is because institutions have been aggressively buying gold. In fact, if we look at what has been going on from a COT perspective, so commitment of traders, what the biggest banks and institutions were doing on gold, we could see that clearly they were adding a lot of longs and net positions were clearly increasing. However, with the last report, what we can see that the profit taking has started. While here, before the move to the upside, basically, actually, while the move to the upside was happening, they were adding thousands of longs. With the last report, we can see that institutions have closed 21K long positions and added another 7.9K shorts, bringing shorts at a quite high level. We went from 24K shorts to 75K shorts, and we only have at the moment 312K long positions. So obviously, yes, we still have way more longs than shorts as we always have on gold. But it is very important to say that we are starting to see some profit taking from an institutional perspective on this huge move to the upside. So can we expect a retracement? Definitely yes. Going down on the weekly, what do we have? On the weekly, we have a market that clearly, as we've seen also on the monthly, has created a huge move to the upside. And after an impulse like this, what do you want to see? You want to see the market give you a retracement. Specifically, if you want to measure a retracement in the market, what are you supposed to be doing? Taking your Fibonacci from the low to the high of the impulse. And by doing it, what you can see? We can see that the 0.382, which is the first Fibonacci level at which you expect the market to actually make a pullback, is at this zone here. So immediately, by looking at the monthly, daily, and the COT data, we know which is the downside target for gold. We want to see gold reach this area. Perfect. Let's go down on the daily and see what kind of situation we have from a daily perspective. Now, on the daily, what we can see that in creating this huge impulse to the upside, the market has actually created as well a pattern inside of this impulse. In fact, this last move to the upside is the last leg of this overextended W formation. Now, after an overextended W formation, what you want to see is the market give you a retracement at least to the 0.382 of the Fibonacci taken on the impulse, meaning that now that we are on the daily, we can actually take a higher target for gold, which is obviously a more conservative target, by looking at what we have on the daily. So we will have basically a daily and a weekly target. By taking a Fibonacci on the daily, we can see that the 0.382 that we had identified on the weekly actually lines up perfectly with the 0.618 on the daily. So definitely it is a good long-term target because we're seeing more confluence at this zone. But we can have a short-term target at the 0.382 of the Fibonacci taken on the daily. So we can also write it here. We have our, this is our daily target. And the other target that we have here, this is our weekly target. So basically, we have immediately two targets in mind that we know that the market is definitely supposed to go and test. Now, just because we have these downside targets, okay, can we immediately be looking for a short? Obviously not, for one simple reason. In all of this move to the upside, there is one candle which is not related to the move, which is exactly this red candle. And why it is not related to the move? Because the market has first tried to start the retracement and then the market broke above the area, meaning that at the moment this candle is acting as a strong demand area for this market. And you can see that the market is currently above it and still respecting it. Now, until the market from a daily closing perspective will be above this area, we can expect more continuation to the upside. Okay, very, very important to say. And if that will happen, we will just adjust our daily and weekly targets by using the new impulses. But it's very, very important to say that if for some reason, which we still don't have any confirmation of, but if for some reason the market will actually manage to break back below the structure, then what will happen? This zone here, which is strong demand at the moment, will be turned strong supply. So basically, previous support will be turned resistance at this area. And after the break, on the retest of this zone, that is where we will have a very good opportunity to be looking for a short for the market to actually reach our daily and weekly targets. So if the market will break, it means that institutions have taken even more profits on the longs, and after the break, on the retest of the level from a 4-hour perspective, because always remember monthly, weekly, and daily are the best time frames for the direction of the market, but the best time frame for entry is the 4 hours. So after the break, on the retest with students, what we will be doing? We will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside completion of this impulse correction and impulse pattern to the downside, and for the market to actually go and reach the daily and weekly target for a proper retracement on the monthly and daily timeframes. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education analysis for all of you, and I will see you in the next video.